Hey guys, welcome back. So we just got some breaking news on the forbearance front and I wanted to take some time and share it with you. So if you've been watching my videos over the last couple of weeks, we've talked about some of the downsides of doing forbearance. The primary one being, that it takes away your ability to refinance into a lower rate or refinance at all if you need it, and or purchase a new home. And as of today, Fannie and Freddie released an updated guidelines, if you will, on that front. But before we get into that, I'm Jeb Smith. I'm a real estate broker here in Southern California. My YouTube channel is all about helping buyers, helping sellers, helping educate homeowners, and guiding you through the real estate process. Even when it comes to trending topics like forbearance. So if that interests you at all, do me a favor, hit that subscribe button and give me a thumbs up if you like this content. So, I mentioned just a few minutes ago that Fannie and Freddie came up with updated guidelines to address the concerns that people in forbearance couldn't take advantage of refinancing. And so, this information came out through Market Watch, and it's so new that I'm actually going to take the time and read it directly from them, verbatim, so that you get, directly from the horse's mouth, if you will. So what they're saying is that borrowers will be eligible to refinance or buy a new home if they are in forbearance, but also current on their mortgage. So that's a bit confusing. So how can you be in forbearance and current on your mortgage? Well, we'll talk about it in a minute, but they go on to say that, if a family has been granted the ability to skip mortgage payments, but continue to make them or reinstate their loan, they can get a new loan. So basically, if you were, if you're one of those people who reached out to your lender, to your servicer, and said, I need forbearance, but the whole time you continued to make those payments. So chances are your account still shows in forbearance, although you've been making your payments. If that's the case, then you are in a position to take advantage of refinancing and or purchasing a new house through Fannie Mae and Freddie Mac's new guidelines. So, and now if it's not Fannie, it's not Freddie, unfortunately, it's only available right now through those government agencies, and the loan has to fit their guidelines. And then if you're one of those people who did take advantage of forbearance, but and haven't made your payments, what happens is you have to reinstate your loan, either through paying that lump sum, coming up with a payment plan, or some sort of loan modification or deferment, at which point you make 3 consecutive mortgage payments after that's been reinstated. Then you are in a position to take advantage of refinancing or buying a house. So it goes on to say borrowers will be allowed to get a new mortgage, whether it's a refinance or purchase loan, 3 months after their forbearance ends and they have made 3 consecutive payments under their repayment plan, deferral option, or loan modification. So what happens is if you're currently in forbearance and you're looking at interest rates thinking, hey, I want to take advantage now, what you have to do is get yourself out of forbearance, either by calling your lender and paying the missed payments up front, going through a repayment plan, loan modification, or deferral, whatever it is that you decide to do is your best option and what you're approved for. And then you have to make 3 consecutive payments in a row to your lender, at which point then you would be eligible to refinance or buy a house. So you can't go directly from forbearance or currently in forbearance and take advantage of refinancing or purchasing. Now, some of you will say that, well, what's the point? I still got to come up with the money or whatever. But no, the repayment plan allows you to structure those missed payments over the course of your loan. So with the loan modification, they would take those missed payments and break them down to allow you to pay it over a period of time. The deferral option allows you to take those payments and actually add them to the back of your loan. But the caveat is, yes, you still do have to make 3 months consecutive payments, and you also would need to be employed. Your income would need to be back so that you could actually qualify for a refinance. So you can't go straight from, unemployment in forbearance to refinance or buying a home, right? There's still guidelines that you have to abide by, just like if you were in a normal market without, the current issues that we're dealing with right now. So I'm going to keep this video short because I just wanted to bring that information to you. If you do have questions about it, do me a favor. Comment below, reach out to me directly. I'm happy to address them. And if there's something else on this topic you want me to touch on or be more clear on, again, leave that in the comments below. because I want to take the time to provide that information, educate you guys to the best of my ability, and help guide you in the right direction. So I appreciate you taking the time to watch. I appreciate your support, and I look forward to seeing you again soon. Have an awesome day. Bye-bye.